comment. Abhijeet Dey, Senior Fund Manager, Equities, BNP Paribas Mutual Fund. In the absence of any strong cues, stock markets in India traded on a lackluster note today. Risk appetite in the global markets abated after U.S. President Donald Trump gave a fillip to trade tensions by imposing a 25% tariff on a list of 818 items of Chinese goods worth around $34 billion. Beijing immediately responded with its own set of tariffs on U.S. goods, making this a game of one-upmanship. Benchmark indices traded weak to finally close the day marginally in the red. Sectoral performance on the National Stock Exchange (NSE) was mixed. While the auto, healthcare and private banking indices eked out marginal gains, the metals and IT indices lost 1.78% and 0.77%, respectively. Nifty Metal Index falls nearly 2%. Top losers in the pack: company latest previous close loss percent, volume Wellspun Corp 130.65, 134.85 to 4.20, minus 3.11, 298,307, VEDANTA 232.05, 238.60 to 6.55, minus 2.7, 515,086,578, and Dalco INDS 231.00, 237.40 to 6.40, minus 2.706, 1,473,259, Jindal Steel 229.05, 234.00 to 4.95, minus 2.126, 1,104,157, Hind Zinc 298.20, 304.30 to 6.10, minus 2.002, 1,462,078. Sectoral trend: top Sensex gainers and losers. Markets at close. The S. Broader Nifty 50 index settled at 10,799, down 18 points. Bata India nears record high, stock up 5%. Shares of Bata India have rallied 5% to 817 rupees, hitting 7-month high on the BSE, on back of heavy volumes. The stock, a footwear firm trading close to its record high of 833 rupees, touched on November 1, 2017 in intraday trade. Driven by various initiatives, Bata India reported a healthy performance in FY18. Revenues grew 7% year-on-year (YOY) to 26.29 billion rupees. Adjusting for the GST impact, growth would be around 12% in FY18. Furthermore, controlled fixed overheads led to EBITDA margin expansion to the tune of 220 bps per second YOY to 13.5%. Read more. Markets ended marginally lower on Monday amid weak global cues. The Nifty Metal Index, however, lost nearly 2% in intraday trade amid rising global trade war fears. U.S. President Donald Trump on Friday said he was pushing ahead with hefty tariffs on $50 billion of Chinese imports, and the smoldering trade war between the world's two largest economies showed signs of igniting as Beijing immediately vowed to respond in kind. Back home, foreign investors have pulled out more than 55 billion rupees from capital markets this month so far due to global trade war worries coupled with hawkish commentary by the U.S. Federal Reserve. This comes following a net outflow of over 450 billion rupees from capital markets, equity and debt, in the last 2 months. Prior to that, foreign portfolio investors, FPIs, had pumped in 26 billion rupees in March. Global markets. Asian shares retreated on Monday after U.S. President Donald Trump cranked up trade tensions with China by going ahead with tariffs on Chinese imports, prompting Beijing to immediately respond in kind. MSCI's broadest index of Asia-Pacific shares outside Japan dropped 0.2% in early trade, near its lowest level since May 31. Financial markets in China and Hong Kong will be closed on Monday for Dragon Boat Festival holiday. Japan's Nikkei slid 0.7% as fears of growing protectionism overshadowed stronger than expected export data.